Did you know the stock market could face its biggest crash in decades by 2026? Imagine the chaos: inflation soaring, savings dwindling, and investment portfolios crumbling. It's not just numbers on a screen. It threatens the financial security of millions of Americans. For the average person, this isn't some distant problem. It's a looming reality. Jobs might be at risk as companies tighten their belts and consider layoffs to stay afloat. The value of your home, your retirement savings, even your everyday expenses could all be affected grimly. Ever wondered what it means for families living paycheck to paycheck? A crash could make basic groceries and bills a nightmare to afford. But here's the question everyone's asking: how can we navigate what feels like a financial storm? It's crucial to understand not just the risks, but the strategies to safeguard your future. What if you could arm yourself with the right knowledge and plans today? So, let's explore realistic steps you can take to protect your finances and why taking action now could make all the difference when the crash hits. Let's dive into the specifics of what you can do. First off, consider your emergency fund. It's your buffer against sudden expenses, especially when markets tumble. Aiming for 3 to 6 months' worth of living expenses is a good start. Diversifying your investments is another key move. When one sector suffers, another might soar. Having a mix of stocks, bonds, and other assets can cushion the blow. Don't put all your eggs in one basket. Spreading your risk reduces vulnerability. Think about ways to reduce debt. High-interest loans can become even more burdensome in a shaky economy. Paying down credit cards and avoiding new debt can keep you financially flexible when the market wobbles. Stay informed about your investments. Regularly reviewing your portfolio keeps you tuned to what's working and what's not. Knowledge is power, and being proactive means you won't be caught off guard by sudden shifts. Lastly, keep an eye on economic indicators. Unemployment rates, inflation, and GDP growth can tell you a lot about the market's direction. Understanding these signs can help you anticipate changes and make informed decisions. Remember, preparation isn't about predicting the future perfectly. It's about being ready for whatever comes next. The peace of mind is invaluable. Now let's talk about the psychological aspect of market crashes. Fear can drive us to make hasty decisions. During a downturn, it's easy to get swept away by the panic in the headlines, but keeping a level head is crucial. Emotional investing often leads to mistakes, like selling low when panic sets in. Remember, the stock market historically rebounds over time. Patience can pay off if you're focused on long-term goals. Having a solid plan can help you stay calm. Sit down and define your financial goals. Are you investing for retirement, a house, or education? Clear objectives can guide your decisions and keep you steady when things get chaotic. Consider speaking with a financial advisor. They can provide personalized advice and strategies tailored to your situation. Especially when uncertainty looms, having an experienced voice to guide you can be reassuring. Connect with community groups or forums focused on financial literacy. Sharing insights and tips with others can offer new perspectives and support. Finally, think about increasing your financial education. Books, online courses, even podcasts. These resources can equip you with the tools to navigate complex markets. The more informed you are, the better prepared you'll be to face the unexpected with confidence. Let's shift our focus to opportunities that can arise from market downturns. While it's true that crashing stocks can cause stress, they can also create unique investment opportunities if you're ready to act. When markets are bearish, stock prices drop, potentially offering bargains on quality investments. Keep an eye out for companies with strong fundamentals because these generally weather downturns better and can bounce back more robustly. Additionally, consider expanding your investment horizons. International markets might offer valuable opportunities that aren't as affected by domestic issues. Diversifying globally can not only spread risk, but also open avenues for lucrative returns that don't rely solely on the U.S. market's recovery. Also, take this time to reassess your financial habits. Could you be saving more? Automating savings or retirement contributions ensures you're consistently putting money aside, regardless of market conditions. Even small adjustments in daily expenses can free up funds for savings or investments, positioning you better in both good times and bad. Reframe your perspective from viewing a downturn purely as a loss to seeing it as a potential springboard for future gains. This could be the time to lay the groundwork for long-term wealth building. With the right approach and mindset, navigating through a market crash can indeed be turned to your advantage. Let's talk about the role of technology and how it can assist in navigating financial uncertainties. Today, numerous apps and digital platforms provide real-time market data, budget tracking, and investment management at your fingertips. These tools can help you stay informed and make prompt, well-thought-out decisions. For example, budgeting apps can help you visualize your spending patterns, revealing areas where you can cut back and save more. Investment platforms often come with features like automated rebalancing and risk assessment, making it easier for you to maintain a diversified portfolio without constantly micromanaging your assets. Think of these digital tools as your personal financial assistants, enabling you to be more proactive rather than reactive. Plus, they can reduce the time spent on the complexities of financial management, giving you more time to focus on strategic planning. Another impactful use of technology is in education. Online webinars, courses, and financial news updates can keep you abreast of economic trends and teach you new strategies to enhance your financial acumen. Remember, technology is an ally. By leveraging it effectively, you can gather insights and spot opportunities that others might miss, positioning yourself a step ahead as market conditions evolve. Utilize these resources to build resilience and adaptability in your financial journey. As we've explored, while the prospect of a stock market crash in 2026 stirs apprehension, it's also a call to action. By arming ourselves with financial knowledge, strategic planning, and the smart use of technology, we can turn potential setbacks into opportunities. Take control now. Review your saving strategy, diversify your investments, and leverage tools that keep you informed and prepared. If you found this valuable, make sure to hit that subscribe button and ring the notification bell for more insights that empower your financial journey. Let's stay ahead together, because being prepared starts with staying informed.